Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 51st COT report in 2014, and as usual we're going to start off with the changes in commercials positions. So here we go, we've got S&P 400 on top of our list. Huge change in commercials positions, 100% change. You can see it over here, and 85 in small speculators. So these are of course great changes in the report, and of course it can be considered a bullish COT change signal. Well, having prices at this level, I'd say let's just move on and have a look at the 5-year chart and see how extreme the market has become. And you can see that we have had actually more of a bearish extreme in the market a week ago, but we couldn't really see a significant decline yet. So a very interesting picture we've got here in the S&P 400, but it's not the situation. I don't think it is a clear COT picture that we have that we can act on. So I'd rather move on and have a look at another market, which in this case is another index, the Dow Jones. Of course, very similar picture here. Huge change in traders' positions, both in large speculators and commercials. Again, pointing upwards, and moving on to the 5-year chart, you can see that similarly to the Dow Jones, we are last week we were at more bearish levels than we're at right now. Although small specs have stayed at their extreme levels, meaning they're giving us a bearish extreme COT signal. But again, having prices so high and being at the end of this year, I would be very cautious in taking any of these signals, and rather move on to another market, which in this case is live cattle, that may have a bit more opportunities. We have a 35% change in commercials positions, 39 in large specs, and 37 in small specs. So pretty decent changes over there as well. And of course, again, this is a bullish COT change signal that we can see at the moment. We do see prices going higher, so this change signal may have came a little bit late. But let's have a look at the 5-year chart and see how extreme this market has become. Well, very similarly to the previous markets, actually. We are moving away from bearish extreme levels. You can see that we have had price decline for some time now. So we can consider that a reaction on this extreme signal that we had for some time now in the live cattle market. The question is, of course, is this rally that we have seen last week going to be able to continue for long, or we're just going to see price go back into the decline mode? And then in this case, we'd be expecting the extreme to be widening towards the bullish side of the market. Moving on to large speculator COT Extreme, we've still got the Mexican Peso with all-time COT Extremes on top of our list. Of course, both in commercials and large speculators also. This is, of course, an unquestionable COT Extreme signal, a bullish one, and we are still expecting prices to bottom out. You can see that the decline was unable to continue significantly for the last 2 weeks now, which brings us to the question whether this is the end of this decline or not. Well, one thing's for sure, and I'm just going to point this to you again. These COT Extreme signals in the past were very efficient in the Mexican Peso, so we are expecting this bottom to develop eventually and see higher prices coming in the near future. Lean Hogs is our next market with a 79 report extreme in large speculators, which in this case can be considered basically a relative COT extreme, nothing more. You can see that we'd be talking about serious extreme levels if commercials were at well, let's say around 25,000 contracts net long level. In this case, they're approximately 25,000 contracts net short. So they're roughly 50,000 contracts away from those extreme levels that we'd be considering very significant signals. But anyhow, in relative terms, of course, this can be considered a bullish one that anyone who's in the market trading lean hogs may take into consideration. S&P 500 is our next market, and the last one for the review, with its 57 report extreme in large speculators. Again, nothing too serious, but you can see that while S&P 400 and the Dow moved away from the bearish extreme levels, the S&P 500 managed to stay there. So we are talking about an extreme that is a bearish one, a bearish COT extreme signal. And of course, we're still waiting for prices to start a significant decline. But of course, it's very hard to tell when this is going to happen. It may happen in a month time, but of course, it may happen in a year or even 2 years time. Indexes are a bit more difficult to analyze COT-wise than other markets, but still, it's an extreme that's present and something that you can analyze for yourself. This was our review for the week. I hope you enjoyed it, and I hope to see you next week. Have a great weekend. Take care. Bye-bye.